Obviously, the big news is I think you've gone from maybe cautiously skeptical, is how I would put you previously, to now you're a Bitcoin investor. You sort of buy some Bitcoin. Recently, you wrote a piece that you titled Revolution. You basically say at one point, you say, look, you think that this price action may prompt a told you so type article, but rather I find the macro backdrop actually steer me in a different direction, that of becoming a Bitcoin supporter, which seems odd given that currently my notion of the everything bubble apparently beginning the process of playing out. And so there's kind of two components here. One is what is happening in what I'll call the macro environment with asset prices and this big bubble and the sell-off and how the Fed is trying to kind of engineer a soft landing before midterm elections, et cetera. And then there's Bitcoin. And it's something that you previously weren't necessarily supportive of, didn't hold any, but that's changed. So walk us through kind of the process of that transition, and also this idea that, like, when presented with new information, you've changed your mind, which, to me is a sign of intelligence and kind of intellectual humility. So just like, how has this played out as you kind of transition to more of a Bitcoin investor or supporter?
Well, first of all, full disclaimer, my wife's been a Bitcoin bull for years, okay? And when I get on the bearish side, I get scolded quite a bit at home. So that's part of it as well. In fact, I told Michael Saylor last summer, my wife has 100,000 target on it, and she still does, I've taken pot shots at Bitcoin and the entire craziness of the asset bubble. And yes, I'm also data driven. And the data, to me, and I've pointed that out all last year as well, is there's just an incredible high correlation between equity prices and crypto. And we saw that again in recent months. It's actually absolutely fascinating. Small caps, Russell peaked on November 8th, Bitcoin peaked on November 10th, and they've been in a 93% correlation. And guess what? They both bottomed this week. So this correlation is there. And I think we have to be all cognizant of that. I'm cognizant of that as I'm flipping positive Bitcoin. And I'll explain this a little bit further here. The first step is to recognize when you have this much liquidity thrown into the world, and we've just never seen this. This is absolutely bizarre what happened with money supply, with debt, with central bank balance sheet expansion. There's just absolutely, it dwarfs what happened during 2009. And so this liquidity has to find a way. In the ultimate TINA, there's no alternative environment. It will seek risk assets. It will seek yield. There's no question about it. Jay Powell and Williams from the Fed, they were all very clear. They are aware of the risk of having too low rates for too long, for losing the sight of their price stability mandate and what damage it will do and the threats it poses. They are fully aware. And hence, it's kind of shameful that they embarked on this route anyway. But for me, so this correlation is still in place. And I'm cognizant of that because if I look at the larger equity market, I still see downside risks. And I still obviously see downside risks then in crypto and in Bitcoin. However, I see there is a big opportunity for this correlation to shift. Last year, I may get the precise number incorrect, but it was something like more money flowed into equities than in the previous 17 years combined. It was just an absolute insane number. Everybody is long. I mean, they've piled more money into equities. Household exposure to equities is even higher than in 2000. But eventually, with everybody parked in the same space, either everybody is right and this party will continue forever, or there is going to be some sort of fleshing out process. And eventually, and this is my position, investors will seek a broader diversification. And this broader diversification is coming about partially because of Fed credibility and what they have done here. My view is that you can debase your currency only so long. You can play this free money debt expansion game only so long. We'll all come to believe that this is all consequence free. And I freely admit this has gone much farther than I would have expected. So far, seemingly consequence free. But I think they also recognize that they have a major issue on their hand. They're talking about reducing their balance sheet aggressively. good luck with that. We have yet to see that go through without major ramifications from this height. I mean, we have no precedence for that. So my view is the correlation between the high correlation that we're seeing right now is going to decouple. And Michael Saylor, when I talked to him last summer and again this last couple of weeks, made a very good point. And I mentioned how this all reminds me of the tech bubble in 2000. The tech bubble in 2000, this was when we also had a massive flush into equities, into unrealistic valuations, massive retail participation. Everybody was flying long. They were making money. Things just kept going up until it burst. And when did it burst? It burst because Alan Greenspan, who was Fed chair at the time, he had pushed a bunch of liquidity ahead of Y2K around 2000 because there were concerns about, everything will shut down on the computers. Obviously, it didn't happen, but he then started pulling liquidity out starting March, April of 2000. Guess what? Everything fell apart, right? But, and what we saw, obviously, a lot of these companies that were based on unrealistic valuations got hit. Some completely went out of business. Others just got haircuts that lasted literally for decades, i.e. Cisco, right? But then there were also those game changers, like the Apples, the Amazons. Yeah, they got major drawdowns, 90%. It was absolutely vicious. But those turned out to be the biggest buying opportunities ever for a long-term hold. Companies that had a button on changing the paradigm. And this is where new technologies such as blockchain are in the same category, in my view. But it's not that this technology is going to disappear. I think it's very clear now that it has staying power, that institutional money is coming in. There's a lot of interesting developments on it. And I'm not saying, look, like in 2000, a lot of fluff disappeared. And I expect that with crypto as well in general. But there will be winners. There will be long-term winners. And my view is that Bitcoin will be one of those key winners. Hence, given what's happening on the debasement front, the monetary debasement front, I, as an investor, because I have, I got places to put money too, and I don't like my cash being just completely mauled by inflation. I'm looking for a long-term allocation, and hence this week I started the process.